Hello, today is the 1st of December 2011, and this was yesterday's chart on the silver market as it was approaching towards this Fibonacci retracement. If it can clear above it, then the next move is up towards this level. Therefore, as far as today is concerned, let me just bring up today's 6-hour chart. And there we have it. So the big move is grander, meaning it reached a little bit higher, settled in for 2 candles after the last one. This ended at 12 o'clock Eastern time. So the afternoon candle yesterday, as well as the evening period, it didn't do so much. Then this morning, the market's going up again. So myself, I'm looking for this to make a test towards this upper Fibonacci level of around 33 2/3. Short-term support roughly in around 32.92 or in around that ballpark area. Now the next thing we're going to take a look at is the inflation adjusted chart. I like to do this at the start of every month, and the average for the month of November worked out from my calculations anyway to be that of 33.23. And I'm going to just go over the same things that I have been before. Market breaking out recently just around this point in here. Now it's having its first consolidation from the breakout point and previous resistance up at around 24 is the more likely scenario. But if you look at this, this is monthly average, so it doesn't have the high low for every period. We've already been down to 26, so the levels have pretty much came back to the previous resistance that was once encountered from 2008, if you look at it in that manner. Now, as far as the trend line analysis is concerned, you can make a trend line in there, you can make a trend line in there. Either way, the market's in a upward trend right now. And finally, we'll take a look at the gold market. This is the GLD. And GLD is the ETF electronic fund, and it's the gold shares I trust. A long time ago, I made a video where if a financial is really going out of their way to state trust us, you may want to do some more research. But what I like about the gold chart is the trend line analysis just can't get any better. This support level has been tested since it first touched back in here. 1, 2, 3, 4, 5. I count like 6, 7, 8 times. And of course, the resistance level is right around in here. Maybe just lift it up just there we go. So this is a channel that gold's been in. This is going back to 2010, and you can even go back even further for this, and I have. However, what I like about these trend lines is you're going to do one of 3 things. You're either going to stay within this range, which means the market's going to consistently make patterns of higher highs and higher lows, or we'll finally have a breakdown on this level, and then just maybe this market may retrace and crash down to 130 or whenever it breaks, who knows. And the third one is it breaks it to the upside, sort of like which occurred in here. These are the signs you'll be looking for the thing to go parabolic. What you want is 2 things, or one of 2 things to occur if you are observing the parabolic move within the breakout. Number 1 is this for it to just break out and just explode, which didn't happen the last time. And the second thing that you're looking for is for it to stabilize within the area, maybe find support at this level, and then break higher. Now, within here, it did come back, it did find support, and it did break higher, but it only reached its previous high, didn't find support anywhere in there, and go higher. But when you see these kinds of moves, that's what's going to make things go very, very parabolic. I remember hearing a lot of people in here saying that gold was just getting way ahead of itself, and maybe for the short term it actually was, but if you want to get ready for the large moves that occur within currency collapses, I can only imagine that having moves of 20, 30% weeks would be very conservative. Thank you for tuning in.